Have you ever wondered how Vanguard, a company that began with just a few $1,000,000, grew into an 8 trillion financial giant? From revolutionizing investing with index funds to becoming a household name, this is the story of how Vanguard changed the game for millions of investors worldwide. So what's the secret behind Vanguard's rise to an $8 trillion empire? It didn't happen overnight, and it's not your typical Wall Street success story. Let's rewind to the 1970s, a time when the world of investing looked very different from what we know today. Back then, Wall Street was dominated by fund managers promising big returns and charging sky-high fees. Most people believed that investing success meant picking the next big stock, and mutual funds were run like exclusive clubs, with hefty costs that benefited fund managers more than investors. Sounds unfair, right? Enter John Bogle, one of the most important names in modern finance. In 1974, after being ousted from Wellington Management, the company that he once helped lead, Bogle decided that he was done with the old way of doing things. He had a bold new vision, a vision that would completely flip the investing world on its head, and the tool for that, the humble index fund. Bogle's decision to embrace indexing wasn't just a rejection of high-cost fund management. It was based on a fundamental belief that most professional stock pickers simply couldn't outperform the broader market in the long term. He didn't see it as just another product, but as a way to ensure fairness for the average investor, a person often overlooked by Wall Street's profit-driven tactics. He believed that anyone should be able to invest in the stock market without getting crushed by high fees or complicated strategies. This belief was at the core of what Vanguard would become, a company for the people, not for Wall Street elites. Now, if you're wondering what's an index fund, you're not alone. Even back then the idea was new. Bogle's brainchild was simple yet revolutionary. Instead of paying a bunch of fund managers to try to beat the market, which, let's be real, rarely worked long term, why not just invest in the entire market and let its natural growth work for you? No guessing, no high costs, no drama, just steady, long-term growth. Sounds brilliant, right? But back then, people thought Bogle was out of his mind. When Bogle launched the very first index fund in 1976, the Vanguard 500 index fund, critics called it Bogle's folly. Really? Who would want to settle for average market returns? They argued when there were experts out there claiming they could beat the market. But Bogle wasn't trying to win the short-term game. He knew that over the long haul, the market itself was the real winner. And guess what? Bogle was right. While many active funds underperformed and charged hefty fees, Vanguard's index fund thrived. It didn't promise to hit home runs, it just aimed for steady, low-cost performance. Over time, those small, consistent gains compounded into massive wealth for investors. By the way, fun fact, Vanguard's first index fund only raised $11 million when it launched, a far cry from the $150 million Bogle had hoped for. But as they say, slow and steady wins the race. But Vanguard wasn't just about index funds. John Bogle did something even more radical. He made sure that Vanguard itself was owned by its investors. Let that sink in. Instead of being run by corporate executives looking to make a profit, Vanguard was set up as a mutual company where the investors are the owners. That means the profits go back to the investors in the form of lower fees. Really? Can you imagine? In a world where finance companies charged through the roof for their services, Vanguard's low-cost approach was unheard of. The concept of a mutual ownership structure was revolutionary for a company of Vanguard's scale. It meant that every investor became a shareholder in Vanguard itself, aligning their goals with the company's. There was no outside pressure from traditional shareholders looking for bigger profits. Instead, as Vanguard grew, fees decreased for the investors. It was a self-reinforcing cycle of benefits. More assets under management led to economies of scale, which led to lower fees, attracting more investors, and in turn, more investors fueled Vanguard's growth, making it an even more powerful force in the financial world. And those lower fees, they're a game changer. But with Vanguard's low fees, more of your money stays with you, growing and compounding over time. That's the magic of low-cost investing, and it's one of the big reasons why Vanguard exploded in popularity. Another major factor that contributed to Vanguard's growth was its emphasis on investor education. Vanguard didn't just offer low-cost products, it took the time to educate people on why those products made sense. Through newsletters, workshops, and later its website, Vanguard became a trusted source of knowledge for everyday investors. This focus on education wasn't just about selling products, it was about empowering people to make smart financial decisions, building long-term trust with its clients. By the 2000s, Vanguard was a household name. With the rise of the internet, Vanguard led the charge in providing easy online access to investing tools, retirement accounts and educational resources for people who'd never invested before. They also spearheaded the rise of ETFs, exchange-traded funds, which combine the flexibility of stocks with the low-cost long-term benefits of index funds. Today, Vanguard manages a staggering $8 trillion in assets. Yep, trillion. It's hard to imagine, but the company that started as Bogle's Folly now oversees the savings and investments of millions of people around the globe. From retirees to first-time investors, Vanguard's become synonymous with trust, reliability, and a commitment to helping people build wealth over time. Despite its massive growth, Vanguard's managed to stay true to its core principles of fairness and low costs. The firm's often seen as a champion of the little guy, giving everyday investors access to financial products that were once reserved for the wealthy elite. Even with competition from other major financial institutions, Vanguard's focus on reducing fees and maintaining transparency has allowed it to stand out in the industry that often seems complex and overwhelming to most people. This commitment to fairness has earned Vanguard a loyal following of investors who trust the company to prioritize their interests over profits. And John Bogle, his contributions have been recognized by everyone from Warren Buffett to Nobel Prize-winning economists. In fact, Warren Buffett himself once said, "A low-cost index fund is the most sensible equity investment for the great majority of investors." Buffett even advised his family to put the majority of their inheritance into, yeah, you guessed it, index funds. Even though Bogle passed away in 2019, his influence continues to shape the financial world. He's remembered as one of the few financial leaders who truly cared about the little guy. Bogle often criticized Wall Street for its greed, arguing that the interests of investors were too often ignored. His mission was simple: give everyone a fair shot at building wealth without having to pay excessive fees or rely on expert stock pickers. Today, his legacy lives on through Vanguard's continued commitment to low-cost investor-friendly practices. While Vanguard's story is largely one of triumph, it also highlights the importance of timing and market conditions. Bogle's vision came at a time when trust in active management was declining, with many fund managers failing to consistently outperform the market. Inflation was eating away at investment returns and high fees were exacerbating the problem. In this climate, a low-cost market-matching solution like the index fund was exactly what many investors needed. Timing, paired with an unwavering commitment to keeping costs low, ensured that Vanguard's approach gained traction, and the company was able to weather economic downturns while continuing to grow. So what's the real secret to Vanguard's success? Vanguard taught us the value of patience, of sticking with a long-term plan, and letting time, compounding and low costs do the heavy lifting. And that's really the heart of Vanguard's philosophy. In the end, it's not about finding the perfect stock or the next big winner, it's about owning a piece of the whole market, trusting the process and letting time work its magic. As Bogle famously said, "Don't look for the needle in the haystack, just buy the haystack." Who would have thought that Bogle's Folly would end up changing the entire investing world? If you're as fascinated by Vanguard's story as we are, make sure to hit the like button, subscribe and drop a comment below with your thoughts. What do you think? Would you trust your money with Vanguard? Thanks for watching and we'll see you in the next video.